Booyah! Let's rewind to the birth of the stock market. 17th century Amsterdam. The Dutch East India Company needed cash to build ships and trade spices. Their solution? Sell small pieces of the company, shares, to regular people. Suddenly anyone could invest and share in the profits. This was the world's first stock exchange. The idea spread fast. London merchants gathered in coffee houses, trading shares and launching the London Stock Exchange. Across the Atlantic, 24 brokers met under a buttonwood tree on Wall Street in 1792, creating the New York Stock Exchange. Stock exchanges became giant marketplaces, not for apples but for ownership in companies. Companies sell shares to raise money for growth and innovation. When you buy a share, you own a slice of that company. You're betting on its success. This system fuels progress, builds empires, and lets everyone, not just the rich, share in the action. The stock market is the engine of capitalism, turning savings into investments and funding new ideas. From coffee houses to digital screens, the core idea remains. Own a piece of the action. That's the magic of the market. The stock market isn't a straight shot to riches, it's a wild roller coaster. There are bull markets, when everyone feels like a genius, and bear markets, when fortunes vanish. The Great Crash of 1929, people borrowed like crazy, then the market collapsed, triggering the Great Depression. Fast forward to 2000, the dot-com bubble. Investors threw money at any company with a .com, most crashed and burned. Then came 2008, risky home loans and bad bets by banks led to a global financial crisis. Major banks failed, markets plunged, and governments had to step in. These crashes are brutal. They wipe out savings and jobs. But here's the key. After every crash, the market has always bounced back, reaching new highs. Busts clean out bad ideas and remind us, investing is serious business, not a get-rich-quick scheme. The long-term trend? Upward, if you have patience and courage. Think you're not connected to the stock market? Think again. If you have a job, your company's health often depends on the market. When stocks rise, companies hire and grow. When they fall, layoffs happen. Got a 401k or pension? You're an investor. Your retirement depends on the market's ups and downs. Even everyday prices, like gas or groceries, are influenced by the market. When companies do well, they can keep prices lower. When they struggle, costs go up. The market is a giant barometer of economic confidence, reflecting our hopes and fears. A breakthrough or crisis can send stocks soaring or tumbling. So when you see the Dow or S&P 500 in the news, remember, it's not just numbers, it's a snapshot of our collective mood. So what's next? The market has gone digital. Trading happens in milliseconds, right from your phone. More people can invest than ever before, but speed brings new risks like flash crashes. Today's giants are tech companies. Apple, Microsoft, Amazon, shaping our future with innovation. The market is always searching for the next big thing, from AI to green energy. Challenges like climate change and pandemics create both risks and opportunities. ESG, environmental, social, and governance. Investing is on the rise, channeling money to companies making a positive impact. The stock market remains the most powerful engine for building wealth and funding progress. There will always be booms and busts, but if you stay patient and believe in innovation, there's always a bull market somewhere. Don't be scared. Be prepared. Booyah!